Hi, and welcome again to another edition of Market Analysis for today, August 7th of 2024. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. All right, so let's get with it. What a way to start this new month and this week. So, investors are seeing little respite as the new trading week begins. Warren Buffett, the billionaire head of Berkshire Hathaway, seemed to brace for the bloodbath. But there are still reasons not to panic. Pessimism took root last week amid downbeat economic data and what looked like a rotation out of the tech sector. But it isn't just a rotation. Almost everything was falling on Monday after Friday's jobs report, which raised fears the U.S. is headed for recession. Warren Buffett has been proved mostly right. Berkshire Hathaway recently dumped half his stake in tech giant Apple. The market sage has espoused a view that stocks look pricey and that it's best to sit on a record cash pile. But Buffett may have missed one trend at the heart of Monday's mayhem. Japan, on which the famed investor has long been bullish, Tokyo's Nikkei 225 plunged 12.4% in one session, in one day, wiping out a year's gain, with the yen up 3% against the dollar, a stomach-churning move for a currency. This is exacerbated by leverage or outsized trades made with borrowed money. I bet that the yen will stay weak is only one of several crowded trades in this market. Bullish stocks, and especially Nvidia, is going to be the ones we want to be taking a look at. So Nvidia and tech darlings is another. As investors fret over recession, stocks could keep sliding and pain may not ease quickly if popular. Leverage trades continue to be unwound. Geopolitical risk and escalation of the Israel-Hamas conflict, for example, is another force investors shouldn't forget this week and is helping gold stay strong. But in the chaos, there are glimmers of hope. The sell-off is so pronounced that it is clearly a panic divorce from fundamentals. And while the U.S. economic backdrop has clouded over, the chances of an interest rate cut from Federal Reserve next month have skyrocketed. The Fed could also react faster if it has to. It doesn't make today's sell-off any easier, but it should add clarity to the sea of red that we are going to be looking at today's fluctuation. So therefore, let's take a look at one of the trend base fib extension. So let's measure how much more let's measure where we can find some levels of support for this downbeat on this market. So let's just use this high, right? And let's just use where we are right now, this particular level, and just leave it there. Let's put it to the left real quick. All right. So how much lower can we extend? Can this extend? Well, the golden ratio, 6.618, that's where the Fibonacci extension tool is used for. So could we drop all the way down to 16,000 about? I mean, that's 1,500 points in one session. It is hard. It's hard to swallow that pill. All right. But initially, let's just go with levels that, we might, it makes more sense to us. So initially the extension will be the 0.236%. So it's right around 17,000. Let's bring that down towards that level around 17,000. That's where we might see some support for this. This falling knife. Don't try to cash it. So that means don't try to buy them dips. So let's just use another level different for 18,000 for our resistance. So keep that in mind. That's for the NASDAQ. Let's use that same tool for the S&P. So let's use this particular high where we are so far right now. Okay. And we just leave it here. All right, so where we are is 5,160. So 5,000, will 5,000 be something that it could be? So let's just use 5,000, the 0.38% of it, right about here, right there, somewhere around there. All right, so let's bring down our level of resistance. So resistance 5,200, leave that there, okay? That's for the S&P. Now let's take a look at the Dow. The Dow also, let's use, okay, so let's use this high where we are, where we're going so far, boom. All right, so let's see, 38,400 or 38,000. Let's just use 38,000. Will we come down all the way down to 38,000? Hey, in one setting, we went down all the way to from 40,400 all the way down to what, 39,500. So that could be happening in the Dow. So let's bring down our resistance, 40,000, 39,600, somewhere around here. That's for the Dow. The Russell, they're all tanking. So another thing that you might want to keep your eye on is that 20%, when you have moved from a high, 20%, you are in a downtrend, bear market. Okay, so let's use now a level of, let's use the first 0.236 as our level of probable level of support for the Russell, and let's bring down our level of resistance to 2085-ish. All right, so crude oil is also tanking. Everything is moving, is pushing lower. So let's just use $70 as our round number psychological support level, 75 as our resistance. So everything is in the red. Nat Gas also in the red. So let's just use 170, bring down to $2 resistance, selling. Everything's selling today. Gold, this is something that it shouldn't be happening, because the dollar index is dropping itself also. So gold should have skyrocketed, but it's also trending lower. So 2340, we're gonna be using 2340 as a probable level of so 2420 resistance. Let's see. Silver also is, everything is in the red, and don't try to catch this falling live. You'll get burned, you get cut. 28 resistance, selling, everything is sell. Copper finally broke that $4 psychological resistance to support level. 380, let's look for a 380, $4.10 resistance. Bitcoin is just took a nosedive. 48,000 for Bitcoin, somewhere around here. Let's bring down our level of resistance. 58,000. Oh boy. Ethereum also in the red. Lower it. 2,000 resistance. 2,600. The euro is skyrocketing. This is $1.10. This is gonna be 110 for sure. 108. The pound. The pound seems to be just being around 127 support for the pound, and dollar index looks just dropping like a stone. Boy, 102. Most likely we met and surpassed. Most likely, so let's just use a bit more 101,800. So that's are the levels for today. So keep this in mind. So it's a sell-off, or we are in a sell-off. All right. So you could probably do, if you're very bullish, some counter trend positions, but we are in a sell-off. So be careful today trading, and we'll see you tomorrow.